Hedge fund managers seem to win even when the market loses. And this is not magic, it is method. Today, I am breaking down how hedge fund managers actually think, move, and invest, so you can apply these same elite strategies even without billions under management. And to note, this entire episode is not financial advice, and so do your own research. First, let us be real. Hedge funds don't think like retail investors at all. And this is what makes them different. They don't just buy and hold. They hedge, short, and actively manage exposure. They prioritize risk-adjusted returns, not just raw returns. They focus on asymmetric bets, that is high upside, low downside plays. They have access to data, research, and deal flows most people never see. But their strategy can still be reverse engineered. Let's break down some strategies you can use right now. No Bloomberg terminal required. First, global macro strategy, where you bet on big picture trends. Talk about interest rates, inflation, currencies, and commodities. Tip: track Fed announcements, inflation report, geopolitical events. 2. Long-short equity. You go long on undervalued stocks and you short the overhyped ones. Tip here: learn to read 10Ks, analyze earning calls, and use Finviz to screen. Event-driven strategy, where you invest based on mergers, acquisitions, and bankruptcies. Tip: set alerts for SEC filings and monitor M&A activities. Quantitative or algorithmic approaches, where you use data, trends, and models instead of emotion. A tip here: you start simple, learn moving averages, RSI, and volatility metrics. Risk parity and portfolio optimization. Now, hedge fund managers don't gamble, they engineer portfolios for stability and growth. A tip here is to use tools like Portfolio Visualizer to simulate risk or reward ratios. It is not about what they do, it is about how they think. Conviction over hype. Hedge fund managers don't chase trends, they go deep on research. Risk first, returns second. Capital preservation is power, and information is alpha. They win by seeing patterns others miss. They manage emotions with systems, whether through quant models or just rigid discipline. Ask yourself, do I have a process or am I just playing the game blindfolded? You don't need $1 billion fund to act smart. Start tracking macro indicators weekly. Read hedge fund 13F filings. See what top funds are buying or selling. Build a personal investment thesis. Write it down and test it. Learn to hedge, even if it is just using inverse ETFs or trailing stops. Steady fund managers like Ray Dalio. You don't need their money. You do need their mindset. If you're serious about building wealth, understanding how the smart money plays is non-negotiable. Like the video, subscribe, and drop a comment. Which hedge fund strategy are you most curious to try? Play smart, think big, and move like power.